Good morning, good morning. Hey, good to see everyone on. Hey, good morning, Brendan, Margaret. Hey, Heather. Long time no chat, babe. Good to see you on this morning. We should catch up. Plenty to chat about. Hey, good morning, Nikhil and James and Abdul and Graham and Andrew. Hey, morning, mate. Hey, good to see you guys. Hopefully you're all awesome and well wherever you are. It's been bucketing down with rain. Bucketing down. Crazy wet. Crazy wet. But, you know, that's good for the ducks, good for the grass, I suppose. Good for the dams, all that sort of stuff. Hey, listen, while things are warming up, I'll do the quick intros as I do. Hopefully the audio's working. Hey, morning, Roy. Jason Witten's my name. Down there, if you don't already know. If you're new and you're popping by, if you're new, and let us know where you're dialing in from. You might be new to the mentoring program. You might be new to our coaching team. You might be just accidentally finding us, dropping by. If you're new to one of our groups, then say hello, give us a shout out, tell us where you're dialing in from. You're good for the leeches. Jesse, yeah, you're dead right. Hey, I took my wife and her sister canyoning one day up in the Blue Mountains. I don't know if anyone knows canyoning. And we had to walk through quite a wet area. The leeches were insane, just piled in on us. And the ladies stood there screaming while I had to get the salt out and get all the leeches off. And by the time I'd administered that on the ladies, cleaned them up of the leeches, I looked back on my legs and I had about 20 just latched onto me. I got rid of them, and half of them I nearly bled to death. I was bleeding for the rest of the trip. Anyway, a quick aside. Leeches, a quick chat about leeches. Good chat, Jesse. Hey, good morning, Elise. Alexis, good morning to you. All the way from Tassie, huh? Van Diemen's Land. South Australia, Sean, good morning, mate. Kylie, Allison, you're in. Everyone's in the house. Hey, good to see you a bunch on this morning. I thought, the good old interest rates are topical right now, right? You know, it's interesting to sort of see out there the banks beating the drum. You know, it's interesting when the media beat up. The media beat up is fed by the banks, and their economists come out and say, hey, you know, interest rates are going to go up. You know, property prices are going to go down. The bank economist. It's very self-serving commentary, folks. Just so you know, because the banks want you to lock your interest rates in. They want you to refinance. They want you to be afraid of what's coming so they can manipulate you into doing something. That's what happens. It's an interesting space when you sort of step back from it and have a little look at it as an investor and what's going on. If the bank's beating a drum, there's something in it for them, folks. They don't do that out of the goodness of their heart, I can tell you. They want to manipulate you as a consumer to do something that suits them, just so you know. Now, that's pretty well what everyone wants to do, to be honest. I'm not going to hold it against them. Just go into things with your eyes wide open. So let's have a bit of a yarn this morning about why I think there's 5 things, economic, financial things, that I think this interest rate rise, when it comes, I don't think it's going to be substantial, but it will not affect things like the media want you to feel. All right, can you see those? They're a bit small, aren't they? All right, let's have a bit of a look at this. Let's have a look at a couple of things. Number 1, interest rates. The interest rates, ladies and gents. The other day, I did a little piece on the board, and I said there's usually 3 questions that are important to ask yourself. Okay, according to who? Compared to what? Compared to what? And so what? Okay? So if we apply this little bit of rationale, this little bit of financial rationale about the world of finance and the world of interest rates right now, and we say, all right, well, maybe we're in for a bit of an interest rate rise. Interest rate rise from where to what, folks? And compared to when? And compared to what? You know, let me tell you that I had a serious conversation with a young person the other day, and they were like gutted that they couldn't get a 2.1% loan. They couldn't get a 2.1% loan. What the? And I'm like, gee, I remember being a little bit kind of miffed that I couldn't get an 11% loan, and I ended up with 11.5% loan. Now, fair enough, that property these days is, $1 million, and back then when I was trying to buy it was $250. But, at the end of the day, team folks, there's some interesting things going on economically, financially, that we need to know. The interest rates are still at record lows. Record lows, folks. Record lows. Now, even if the interest rates went to 5%, that is still lower than the long-term average, the historic long-term average. Now, I don't think they're going to go to 5%. I don't think they're going to go to, above 4%. But let's see. But, according to who? Well, the banks hyping this stuff up right now. Be aware of why they want you to lock your interest rates in for 3 years, because you've got so much equity, right? Locking things in, you can't get access to your equity. And when you want to get access to your equity, you have to have a break fee, and then they make more money out of it. It's rubbish. Don't do it. Talk to the right people, folks. Compared to when? Compared to 2 weeks ago, 2 years ago, 10 years ago, interest rates are still low. Even if they go up, they're low, very low. And so what? Will it affect you? As a property investor, smart property investors are already have buffers aside, already ready to increase their rents, because that is what we use to soften the blow. But this is in general, if we have a look at it, rates have already started to go up anyway. Irrelevant of what the RBA does with the cash rate, the interest rates in some of the products have already increased. Look at this, folks, from 2% back up to close to 3%, the 3-year fixed rate. And that's the one the banks are trying to get you on when it comes to this stuff. So the rates have slightly increased anyway on some of the products. It's not the end of the world, and it's fine. So for me, number one conversation is that interest rates, even when they go up, are still extremely low when it comes to this stuff. Next, which is the affordability. This is an index that relative to household income since 1999, I think it was. The relative affordability index is still pretty damn fine. All right. Still affordable, as affordable or even lower than, back here in and around these sections here. So dollar per commitment to mortgage, folks. Dollar per commitment to mortgage. There's still plenty of salary, plenty of affordability in the household income. So number two, people have still got spare cash flow. They're not on the bones of their bum. Okay, so number two. So that's a big one, because it's not the ability for someone to afford to make the payment is still there. Okay, as we go. The next one, number three. We've been like a bunch of little chipmunks, or what's a bowerbirds? What's an animal in Australia that gathers food and tucks it away for later? I don't know what it might be, but we've been like little chipmunks since the pandemic arrived. The last 2 years, folks, Australians have had the highest, a minor bird. Yeah, actually, yeah, they do stash stuff away, don't they? The highest savings and the highest cash savings we've had in over a decade, folks. Aussies have been in there piling in money and cash into their savings account, into their bank accounts. We've got more money than we've had in decades over, a long time. So if interest rates rise, people have got a couple of bucks tucked away when it comes to that. I saw a little number the other day, over $30 billion. $30 billion in cash, team, that Aussies have saved and tucked away in our institutions. Now, I think that's lazy money. I think you should be releasing that cash and putting it to work. But we've got, again, there's money, there's cash. If interest rates go up, people have, interest rates are still pretty low. The ratio of incomes to debt is still very low at all-time lows and decade lows. We've been squirreling cash away like a minor bird or a chipmunk. Okay, number 3. And number 4, wage growth. People's wages are going up, okay? I've had many a conversation with many people who've had their wage go up 5, 10, 15, 20 grand. So there you go. If an interest rate goes up, let's have a quick look at that. Let's have a quick look at that. Mathematics, right? I should have done this before. Let's say you've got a mortgage, you're paying a $500,000 mortgage, times that by, let's call it 3%, is $15,000 a year. All right, $500,000 mortgage, times that by 4% is $20,000 a year, folks. So, by and large, a $5,000 plus some taxes, let's say $7,000 or $8,000, $7,000 or $8,000 pay rise covers a mortgage payment. Okay, so wages are growing. Let's just do that. $500K. Now, that was an interest-only payment, by the way, folks. If an interest payment goes from 3% to 4% on a $500,000 mortgage, that's $5,000. $5K for the year. And wages, some people are able to, weather that storm also. $5,000 in a buffer set aside. You as a property investor should have buffers in place. And if you don't know what a buffer means, well, you need to find out. You need to know what buffers are. You need to know pre-tax cash flow, after-tax cash flow, those sorts of things. And homeowners, if you're a homeowner and you're not an investor yet, well, then you need to start to understand what these things mean too. So what have we got there? We've got 3. This is number 4. Wages are increasing. We've got a little bit of wage growth, and we'll see if that stays on track. It's been the sort of the weakness in the economy for a while, the Achilles heel of the Australian economic activity, but we've got a little bit of wage growth, okay, as we're going along. And let's have a look at this. Household wealth. Household wealth has gone up significantly, 25% in the last 2 years across all of the asset classes. I saw something yesterday. I should have written it down. I think it was 13. I think the average or the aggregated wealth is like $13 trillion, folks. 13 trillion. Get that. 13 trillion. And in the last 6 months, it was an article by RP Data. Aussies' wealth has increased, which includes, their shares in equity, land, other financial assets, super, currency and deposits, those things, by $1 trillion, by $1 trillion. So, if interest rates do go up a little bit, there's plenty of cushion in the marketplace. So let's just do a recap on that. Number 1, interest rates are still at all-time lows. Low, okay? All-time lows. The affordability index is still low and well within range. Number 3, can't remember what that one was. Oh, yeah. Yep. We've got savings and cash. By and large, Aussies have saved a bucket load of cash, an absolute truckload of cash as we're going along. Still got that squirreled away in the bank account. Wages, we've got some wage growth, okay, happening. And last but not least, our wealth has increased significantly. significantly. So for me, that is a big tick in the box, folks, for the majority of Australians, people who, the regular everyday Aussie, by the way, not necessarily people who've got themselves into strife or problems or can't manage their money properly, but most people, by and large, are in this position. And it's not going to be as dramatic as the media wants you to, they're trying to scare you, along with the banks, to do things like lock in your interest rates for 3 years, so then you can't unlock your equity, you can't get access to it, if you did want to do it, you have to pay break fees, et cetera, et cetera, et cetera, et cetera, okay? And they've already put their interest rates up, their 3-year fixed interest rates up. Anyway, there you go. So hopefully that makes sense. Hopefully, for me, I was just thinking about that this morning as we go. And, we'll have a bit of a look. Alison, is talking about a few things that are now in the minutiae of what we're doing as property investors, understanding, builders and, making sure people are going to be able to build their stuff. There's a few builders who are going to be who are going to come unstuck in the next little bit. Queensland is an interesting place. Queensland's increase in construction costs and labour costs has been quite significant in comparison to other places, like Sydney. And Sydney's had a bit of an increase. Melbourne's been pretty steady. So, folks, it's interesting to see as we navigate this next couple of years how we're going to land on the other side of it. So there you go. There's 5 reasons why interest rates, 5 fundamental financial dollar and cents reasons why the everyday Aussie is not going to be, by and large, living on the street because the interest rates went up a little bit, like the media wants you to believe, which is bullshit and rubbish. It's not too bad. So if you're not in that position, you want to get yourself organized, you should start doing that. And if you haven't got yourself a coach, mentor, or whatever, reach out. That's what we do. And we help people get themselves in position, because right now we should be taking advantage of a few markets. We've talked about that before too. But anyway, that's it from me this morning, folks. Hopefully that made sense. And it sort of gives us a little bit of rationale check when it comes to what might be you might be hearing in the media, all right, as we go. So, there you go. Alison said, she had a few things that she had to pay for and sorted it out, had the buffer. Happy days. You always got to have buffer, folks. Tell me in the chat just quickly before I finish up, per property, what's the dollar amount per property, per investment that you should have as a buffer, folks? Whack that in the chat for me, just so anyone who doesn't know what we're talking about remembers this one. Minimum. I've got a little number. Absolutely, Andrew. Anything that distracts you is just some noise. It's distraction. Keep your eye on the prize, folks. Alexis, boom, you get a car, and you get a car. Well done. $5,000, folks. Brent, 20 to 30 is a bit high. If it's an old property, Brent, you might want to get up to 10, because old properties can be a pain in the behind when it comes to maintenance. But 20 to 30 is a bit high. $5,000 per property is spot on. Maybe a bit more if you're a little bit more conservative, or your properties are older. So there you go. Anyway, folks, that's it from me. 8:31 now. 1 minute over time. You guys be awesome. Have a great day, and join me tomorrow. Join me tomorrow for another Wealth Coffee Chat, the 25th. My birthday on the 26th, you lot. I'm expecting a present. No, I'm kidding. All right, you guys have an awesome day. See you tomorrow, around about the same time, for another Wealth Coffee Chat. Adios, team.